it. Hey everyone, and welcome back to the channel. Today, we're diving deep into the world of active trading. If you've ever been fascinated by the idea of making quick strategic moves in the market rather than just buying and holding for years, this video is for you. We're going to break down two of the most popular active trading strategies, day trading and swing trading. We'll explore what they are, how they work, and what it takes to succeed. Ready to level up your trading game? Let's get started. First up, let's talk about day trading. The name says it all. Day traders open and close all their positions within a single trading day. The goal is to profit from small intraday price movements. This is a high-octane, high-focus strategy. You're not concerned with a company's long-term fundamentals. Instead, you're looking at things like level 2 data, order flow, and real-time price action on very short timeframes, like 1-minute or 5-minute charts. A day trader might make dozens of trades in a day, scalping tiny profits that add up over time. So, what does a typical day trading setup look like? One classic example is the opening range breakout. Traders will watch a stock for the first 15 or 30 minutes of the market open, identifying the high and low price of that initial period. If the price breaks decisively above that high, they might go long, betting on continued upward momentum. If it breaks below the low, they might go short. The key here is volume. A breakout with high volume is much more convincing than one with low volume. Another popular setup is trading based on key support and resistance levels. A day trader might buy when a stock bounces off a strong support level or short it when it gets rejected at a resistance level. Of course, day trading is incredibly demanding. It requires immense discipline, a solid understanding of technical analysis, and the ability to make split-second decisions without emotion. The risk is substantial. Since you're often using leverage to magnify small price moves, a trade that goes against you can wipe out your gains and more very quickly. You must have strict risk management rules, like using stop-loss orders on every single trade to define your maximum acceptable loss. It's not a path to easy money. It's a full-time job that requires constant attention to the screen. Now, let's shift gears to swing trading. If day trading is a sprint, swing trading is more like a middle-distance run. Swing traders aim to capture swings in price that play out over several days to a few weeks. This means you don't have to be glued to your screen all day, making it more accessible for people who might have other commitments. You're looking for larger price movements than a day trader, holding positions overnight and sometimes over weekends. For swing traders, the daily and 4-hour charts are king. They're looking for patterns to emerge over these longer time frames. A common swing trading strategy is trading pullbacks in an established trend. For example, if a stock is in a strong uptrend, a swing trader will wait for a temporary dip or pullback toward a moving average, like the 50-day moving average. Once the stock shows signs of resuming its uptrend from that level, they'll enter a long position, aiming to ride the next wave up. This is a great way to enter a strong stock at a better price. Another classic swing trading setup is the breakout and retest. Let's say a stock has been stuck under a major resistance level for weeks. When it finally breaks out above that level on strong volume, a swing trader might not jump in immediately. Instead, they wait for the price to pull back and retest the old resistance level, which should now act as new support. If the price holds at that level and bounces, it's a powerful confirmation signal to go long. The target would be the next major resistance level, and the stop loss would be placed just below the new support. Swing trading relies heavily on technical analysis. You'll be using indicators like the MACD, RSI, and Bollinger Bands to identify potential entry and exit points. Unlike a day trader, a swing trader might also pay some attention to upcoming fundamental catalysts like earnings reports or major company news, as these can create the volatility needed for a significant price swing. However, the core of the strategy remains technical. The risks in swing trading are different from day trading. While you're not exposed to the rapid-fire risk of intraday scalping, you are exposed to overnight risk. News can break after market hours that causes a stock to gap up or down significantly at the next open, potentially jumping right over your stop loss. This is why position sizing is absolutely critical. You should never risk so much on one trade that a single unexpected event could cripple your account. So, which one is right for you? It really comes down to your personality, lifestyle, and risk tolerance. Day trading requires intense focus and a significant time commitment during market hours. Swing trading offers more flexibility, but requires patience and the discipline to hold positions through several days of ups and downs. There's no better strategy, only the one that's better for you. To wrap things up, both day trading and swing trading are active strategies designed to profit from short to medium-term price movements. Day traders live in the world of intraday charts and quick scalps, while swing traders look to capture larger moves over days or weeks. Both require a solid foundation in technical analysis, a well-defined trading plan, and, most importantly, impeccable risk management. Never forget that trading involves substantial risk, and most people who try it lose money. My biggest piece of advice is this: before you ever risk a single dollar of real money, use a paper trading simulator to test your strategies. See if you can be consistently profitable on paper for several months. This will help you refine your approach and build confidence without the financial pain. Only when you have a proven edge should you consider stepping into the live market, and even then, start small. Thanks so much for watching. I hope this breakdown was helpful in clarifying the differences between day trading and swing trading. If you got value from this video, please hit that like button and subscribe for more deep dives into trading and investing. Let me know in the comments which strategy you're most interested in. Until next time, trade smart and trade safe.